Okay, so listen, if you're listening to this on the audio, we're obviously going to recommend you go and check the video out, the YouTube, because we're going to be using a lot of charts here. At the same time, I will do my best to try and explain what's going on. But we're going to start, with the Bitcoin spiral based on halving. By the way, this is a chart you should definitely go and check out. I think this is the one that really stood out to me, Ruth. I was like, okay, this guy's cool. We've got to talk to him. Do you want to explain what this chart does?
Yeah, so this one is, actually, maybe I can say a bit about the history of this chart first. I was not the inventor of this chart, by the way. So it actually started out with like a pendulum chart, like a pendulum was swinging and it was kind of drawing Bitcoin's price. And then some other account, also on Twitter, I think at Clockwork Parts, they created some of the first polar charts, similar to this one. And I really loved that concept to explore Bitcoin cycles because I think cycle theory is very interesting. And I try to, make them cooler and, more attractive and added some stuff to it. And so in this particular chart, we're looking at the spiral chart based on the halving. So the halving is initially the catalyst for each cycle. And so this one, it basically each round in a circle, each rotation in the circle represents one halving. And then the blue dots that you can see, those represent the days that we kind of made all-time highs, or the blocks in this case that we made all-time highs. So one rotation is one halving, which is 210K blocks, and which is about 4 years, a little less than 4 years in general.
Okay. And what is this chart? How is it useful for you? What does it tell you?
Yeah, I mean, the fact here that you can just see that it's spiraling out, right? So it shows that with each halving, like Bitcoin's price in this chart is like it's expanding, and so without any model, we can kind of see, that the price has never crossed itself, so we can kind of see like, oh, what is a bottom in a way, like through this chart.
But how does that work? Because the prices have gone up to all-time highs and come back down.
Yeah.
So what do you? Is it because it hasn't hit itself because it's based on time?
Yeah, it's in this chart is based on block time. But if we switch to the next chart, it's actually.
Hold on a second. So what we're basically saying here is like Bitcoin is volatile, but on an annualized basis, on a cycle basis, it's never. It has the price has gone lower than previous all-time highs, but on a cycle basis, it's never dipped below itself.
Yeah.
So exactly. Basically every 4 years, you're pretty safe.
And that's because there's like seasonality involved in Bitcoin. And that's why if we go to the next chart, which is also the spiral chart, we continue with this. But I changed it now. So this one is based on time. And so instead of looking at the halvings, here we look at time. And the reason why that's useful is because, as humans, we think in human time, we don't think in block time, right? So, So for market analysis, in general, human time is better, in my opinion. And the thing that stands out here is that, in this chart, so if we take the 4-year chart, so every rotation in the circle now represents 4 years, starting in 2009. And we see now that all the blue dots, all the all-time highs fall in the first quarter circle, in the first quadrant.
Apart from the first couple of years.
Yeah, apart from really when Bitcoin, in the early days in 2009, indeed. But the last 3 cycles, all of those all-time highs fall in that first quadrant. And why is that? Well, that is because of the cycle pattern that we have, which is kind of initialized by the halving, but seasonality tends to play a role as well. So you see that mainly around Christmas time is when every 4 years at least around Christmas there has been this blow off top and then a fierce correction.
Right. Okay. And the interesting thing about this is that you can tell with the cycles, it is. The gaps between them are starting to constrict. So it's taking a bit more effort for the price to rise. Is there a logarithmic version of this?
This is on the logarithmic scale.
Oh, this is on the logarithmic,
right? Like, so you can see.
Oh, I can see. Yeah. Okay. Yeah. So it is starting to get
each
tighter.
ring in this cycle is times 10.
we don't want to make this too popular, because if we make this too popular,
Yeah, who knows? Like eventually the price might fall and cross below. I think that will happen at some point in the future because, with an increase in market cap, it becomes more difficult for the price to rise, and so there is a likelihood that at some point in the future, perhaps it will cross the previous cycle, and also because cycles are shifting, right? Like so. At least it's likely that they will shift in the future in some shape or form. So then it's more likely that the price might cross the previous cycle at some point.
So we got about 2.5 years of bullshit to go then. Yeah. 2025 is going to start getting interesting again.
Yeah.
I hate this chart now.
Yeah. So in this one we can look at the halvings. So actually the green dots in the fourth quadrant. You see like some dark green bigger dots. Those are the halvings. So you can see that each rotation they move a bit back, right? So that's because the halving is usually a little less than 4 years. And if we go to the next slide, also now the bottoms are so the bear market bottoms are marked, and you can see that they are usually in the south of the chart. So they also happen around the same period. And
Sell. So you're saying you're telling me are you selling?
No.
Yeah. Okay. This is really interesting.
Yeah. So, but this is the perspective of a 4-year cycle, and we'll get into some different perspective. You can look at cycles in different ways, but indeed here it shows that usually at the south, which we are kind of approaching, which would mean the end of the year, is where we would potentially make a low based on this chart. Obviously, there are some differences this cycle, and that is because the hype top was actually in April, so we kind of have been kind of correcting. We made some higher highs in November, and that again I kind of blame on this seasonality and this kind of I think people were expecting prices, everyone, me included, we were expecting prices above 100K at least, right? And so it was kind of like this self-fulfilling prophecy that around Christmas we were going to again see like new all-time highs, and it happened because of it. But it was actually not because there was any hype in the market. It was just because holders of Bitcoin, hodlers, they were just kind of believing that it would happen, and we managed to make a few all-time highs in November. Again, those last blue dots that you can see, and I think after we have been correcting, but one could argue that, and I think it's actually more reasonable to argue that we have been kind of correcting since April, since we had the China mining ban and all that stuff. And so now I added the lows, and here I colored the cycles. So each cycle just has its own color, so you can differentiate a little bit better between them.
First peak, first all-time high.
Yeah, so there's quite some interesting things. So if we compare in this chart, so the peak of the 2013 cycle, the first, like 2013 was a double top, right? So the first top of the 2013 cycle actually coincides exactly with the first peak of the April top that we had this cycle.
Oh, really?
Yeah, so that is kind of incredible,
Wow.
on this time scale. And the first autumn high we started making after this whole summer correction that we had, was also exactly at the same moment in time. So that shows how cycles are kind of
Self-fulfilling prophecies.
Yeah.
And do you think part of that might be the kind of, when you look at there's like that chart that shows the different kind of emotional states of markets. Do you think that's just that's what's playing out? Because it doesn't matter whether it's tulips. It doesn't matter whether it's Bitcoin or oil market. So it feels like every market seems to have that same kind of structure in price.
Yeah, it's human psychology, right? And in a way, it's cool how Satoshi was able to kind of record this human psychology, on the blockchain. And, actually this collective unconsciousness is like, recorded on the blockchain. So that's interesting.
Yeah.
Yeah. So this one, so again, we are looking at the spiral chart, but here I'm actually using some on-chain data to to show. So I use the short-term holder cost basis, which is the same as the short-term holder realized price. The realized price is the average purchase price of all Bitcoin, right? So the last price that has been paid for each transaction on the blockchain, and if you count those up, you get the realized price. And the short-term holder realized price or short-term holder cost basis, we actually look at that price, but then only for the last 5 months. And so we get like a more recent view. And so we can use it to color the price. So we go from like dark red, which means like heavy bear market, to like dark green, which is then heavy bull market. And we can see that like the darkest greenest colors we obviously have again in that first quadrant, with some like sudden red corrections, in the middle. Those were like the summer dip that we had, and also in the 2013 cycle we had this mid-cycle dip, and but all the dark red is basically in the second quadrant, which we are in right now.
But the bear markets seem to start a little bit later each time, or sorry, a little bit earlier each time based on this chart.
Yeah.
And same with the bull markets. It's the start of the bull market. So
yeah, it's not always a perfect view, right? There's ways to look at the cycle. So you can look at them from the halving to halving, or you can look at them from previous all-time high to previous all-time high, or you can look at them from the bear market bottom, or in this case we're looking at the 4-year cycle starting at the start of each year, right? So there's different ways you can kind of align them, but in this alignment, and I think this is it's a very good alignment to look at it this way. But indeed, cycles are like slowly shifting, and that's because the halving always has been the catalyst, and the halving is based on block time, right? So and so it's a little less than 4 years, and that's why you kind of see this shift.
Yeah, but it implies therefore by the end of the year we could start getting back into bull territory.
Yeah, the south is the end of the year, and I mean we could potentially make like a bear market low there. Although if we look at on-chain data, and I think on-chain strength, I mean on-chain is not ideal perhaps to predict what is coming, but it's very good at looking like what is the current state of the market. And we have seen like true capitulation on this red dot, which is marked now at the southeast.
Yeah.
We have seen real capitulation there. So it is likely that the bottom is in, but yeah, obviously nobody can predict the future. And I do expect some downside perhaps again later this year. And it might be again this kind of self-fulfilling prophecy, right? That usually a bottom happened in the south, and so perhaps it does again, or at least we'll make some low, maybe like price might go down a bit, but the next 2 years look pretty good.
Have some dry powder just in case.
Yeah.
Sorry, Danny, just go back a second. So there has been quite a bit of criticism pointed at on-chain data and on-chain analysis. What parts do you think are valid, and what are the most useful parts of on-chain data that you use?
Yeah, so as I said, I mean, on-chain is not ideal to predict where Bitcoin's price is going exactly, especially not on the short term. It's more like on the long term, it does a bit better, but it's very good at looking at what is currently happening, like where are we kind of at. And so in that sense, it's very useful.
All right, Danny.
Yeah, so this is the last spiral chart that I wanted to show. So instead of looking at Bitcoin's price, we can actually also plot Bitcoin's market cap. And why is that useful? Yeah, because we can then compare it to, for example, other assets. Like in this chart, we included silver, gold, and real estate. And so again, yeah, I love this chart because...
I love this chart.
Yeah, you can, without any model, right? It's just data that is shown. We can kind of see where Bitcoin is going. And so this cycle, the past cycle, we were kind of trying to surpass silver's market cap, but we kind of rejected off of it 2 times, or
Did we get
3 times.
above it at all?
Maybe slightly at some point, I think.
Oh yeah, because we got over 1 trillion. Didn't we?
Yeah, we got over 1 trillion. Yeah, I think silver is 1.2 or 1.3 trillion. But I think we just, we might have gotten over it for like a short time, but barely. We kind of rejected off of it. And
I like this because it could be a rallying call for Bitcoin. It's like, come on, let's fucking take down silver.
Exactly, and gold
And then-
next, right?
And then Peter Schiff.
Yeah, and then Peter Schiff is coming.